Welcome to the Bear, the Bull, and the Ugly podcast with Stephen Kalajian, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening to your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey, good afternoon, everybody. I'm Stephen Kalajian, and welcome to the Bull, the Bear, and the Ugly. What an unbelievable day. One hell of a day here. We had the CPI number that came out hotter than expected, as I thought, coming into the morning. The S&P futures at one point were trading at the 60-20 level, and that was exactly the low of the day, and that happened right after the opening. And then we just skyrocketed up. Some really great patterns that I'm going to show you today off the 15 and 30 minute time frames where we caught some really great short patterns, but one hell of a day here. You saw the markets again push down. The CPI number came in, like I said, 2/10 hotter than expected, but we rallied all the way from 60.20 to a high of 60.84. So we ran 64 points off the S&Ps, off the lows. They pushed down at the end of the day, and then there was a big buy program at the end of the day, and they ripped them just now 8 to 10 handles here near the close. I want to get right into it. Big stock today. Upstart had great earnings, beautiful patterns in Upstart. I'm going to show you. And for those of you who are not familiar with me, I have over 41 years of experience in the markets, trading futures, stocks, equities, ETF, forex, options, you name it. 41 great years. I don't have 1 ounce of regret. I love it. Every single day is a day that, is a new day. And that's what I love about this. Every day you challenge yourself to be able to trade the markets, to be able to work with people all around the world, and to be able to help them, guide them, put them on the right track, and give them the ability to really be consistent. And that's what I do every single day. Worked on 4 different exchanges: the American Stock Exchange, New York, COMEX, and the Board of Trade. And I have met some of the most greatest traders along the way, and some of the top hedge fund managers that are still really very good friends of mine until this day. 41 years. This August 1st will be 42 years. I'm 62 years old. So I started when I was 20. And guess what? I love it. Not a day that goes by that I look back. I just love waking up every morning and coming right in here and just get going. I love talking to everybody from all over. I give up my phone number to people. I talk to people about trading from all around the world, and there's nothing greater. And hosting this podcast each and every day now is something I really, really love. I want to get right into it. Let's look at Upstart here. Okay, UPST. If you look at Upstart, you can see here we had the big gap up this morning, and I shorted it right near the top here on this bar right here. Let me just turn the camera off here. I took a short here above the 89.20 level, and it dropped here a good, right here, a good almost $2 here. But this was a really great pattern here. The pullback off the 15-minute time frame, really great pattern. Oversold into the positive MACD, big buying pressure, rising ADX. So caught a really, really great long there. Off the 15-minute time frame, 3 positive divergences, and then this is the pullback right here, and then you can see here we got the pullback on another buy signal on the 5-minute, and then caught a really great short, making new highs, non-confirmation, but this was a great short at the end of the day right here when they were making new highs, the 90.44, and the MACD is non-confirm on the 15 and on the 5-minute time frame, major sell divergence. You can actually have a trend, which we were bullish on the 15, 30, and hourly time frames, and then we had the buy and sell divergences. So again, of the 5 conditions, a trend, a buy reversal, a sell reversal, a correlation, a disconnect, and of the 5 conditions, each condition, there are 2 strategies, a buy and a sell divergences. All my strategies are all predicated on buy and sell divergences. And that's how I look at the market. I studied this for over close to 10 years, and I built this, and it really gives me great joy. People all around the world use the software in my community, and people who are using it, again, whether they're trading stocks, index futures, commodities futures, forex, and they use it to help them with their options trading as well. All right. Another great stock I want to show you here today is Lily. So Lily, coming into the day, I was bullish on Lily on the 30 and 60-minute time frames. I'm going to show you Lily here. All right. And so I was very bullish here. I'm sorry, on the 30-minute time frame when Lily reversed to buy right here. When Lily reversed to buy on the 30-minute time frame, I had the buy signal here on the 15. So you saw the 15-minute time from the algorithm is bullish, and then when the 30-minute time frame reversed to buy right here, there was a great pullback here on the 15. So again, this is a disconnect, the buy divergence and a disconnect, meaning 2 of the 3 are bullish on my indicator 4. And then I got the beautiful buy here on Lily, and then another great long here on Lily right here. Another great long within the disconnect, and you can see the moves that we have up. My strategies last anywhere from 1 to 8 bars. So if it's a 15-minute time frame on the strategy, anywhere from 15 minutes up to 2 hours. Another great stock today was Apple. Apple really exploded today, and closing near the highs of the day. You can see it. So Apple had the big buy reversal here today, right around the 10:45 time period. I was already bullish on Apple on the 15 to 30 and the 60-minute time frame. So when Apple got that really big buy signal on the 15, it then created a trend or correlation. A trend meaning now all 3 time frames are in buy mode, and then all of a sudden, what do we look to do? We look to buy pullbacks here on the smaller time frames, and you can see the pullbacks. And I'll switch this to the smaller time frames. Once Apple got that big buy signal on the 15-minute time frame, you can see that the pullbacks here were very meaningful. Here's the first pullback right here on the 10:15, and then here's the real big meaningful one. Once the 15 reversed to buy, and you can see Apple never looked back. 234.87, and it ripped north of $1. Again, you got sell divergences here. So basically, I knew when the MACDs were non-confirming that we're going to actually stall out there. Another great pullback right here on the 5-minute. And one thing Apple did not do, which I'll expect tomorrow, all right, Apple did not get a pullback on the 15-minute time frame. So if you're looking at on Apple on the 15, 30, and hourly, tomorrow I'll be looking for a nice pullback on Apple on the 15-minute time frame. What else? OKLO, another great stock today. All right, another great stock today. OKLO, beautiful. Now they report earnings tomorrow, but look at this buy divergence here on the opening. When OKLO opened, it pushed down. The MACDs did non-confirm here on the 15, and it ricocheted right back up. And once OKLO reversed to buy, I knew that the lows were in for the day. And it also, if you look here on OKLO on the 30-minute time frame, you can see OKLO was in a negative mode here on the 30. But look what happened when the 15 and the 30-minute time frame reversed to buy. You look to buy the first pullback on the 15-minute time frame, okay, and that was right here. Okay, this is the first pullback around 230, and you can see what happened with OKLO. It went from the 1594, and it rallied about $1 at the end of the day. These patterns tend to repeat themselves each and every day. It gives me great joy to teach this. Everything I do is all predicated on combination methodologies using the 3 multiple time frames, the 15, the 30, and the hourly. Very important to look at the time frames. I taught this to some of the top hedge fund managers in the world. Let's look at BBAI, another great one, BBAI. If you look here, the same type of pattern I just showed you, okay? When the 30-minute time frame reversed to buy, you look to buy the first pullback, all right? Right here, it got down to the 877 level, and you can see, all right, you can see where this thing went eventually. Up and away. So basically, when the 30-minute time frame correlated with the 15-minute time frame, you look to buy the first pullback on the 15. Great. That's a kaboom right there. A really Apple. You had Upstart. You had BBAI. Lily was very strong today. Lily at one point was down $10 in the pre-market and shot up to $8.77 near the close, and then backed off here about $5.50, $6 near the end of the day. So today, really surprising, with a stronger than expected CPI number, you would think they absolutely would crush them, right? But again, pure mathematics. We told the story here. I want to show you another great pattern here. I'm going to show you the Qs here. All right, monster pattern on the long here. So if you look here on the QQQs on the 60-minute time frame, we were bullish. We never reversed to sell. You can see my indicator on the 60-minute time frame. And then you look here, when the Qs reversed to buy on the 15-minute time frame, it correlated with the 60s, but still the 30 was negative. But then I got this really great long right around 11:30, and the Qs went from 524.60. They ran almost $3. They ran $3.60. Nasdaq futures ran north of 100 on that. That's a monster pattern. A monster pattern. All right. And this is exactly what we do. And we're able to teach this to so many people from all around the world. It's all it is waiting patiently. Again, one of my 5 key words, we were patient. But the real good pattern today, early on, was on another great pattern was on the S&P futures on the 30 and 60-minute time frame. And I'll just show this to you quickly. And this was a pattern that we really caught really well. And it was a sell divergence. It was a sell divergence in a negative, well, in a disconnect on the spiders on the Qs, but on the spiders it was a sell divergence. So here, the S&P futures pushed up right around the we got the push down here. Beautiful bear flag. We got short into the negative MACD, and the S&Ps dropped all the way down. They dropped about 30 points from the S&P here. You can see, again, you're getting overbought on the 15 and the 30 using my 10-bar moving average. Got short here, and then it dropped, boom, from 70 all the way down to like 30, 35. Beautiful short there in the overall market. Again, most important, what we teach everybody here, you got to use stops. Very important to use stops. Very important to be able to learn how to use the software and what you're trading, whether it's index futures, commodity futures, and or trading the underlying ETFs. It's very important to use multiple time frames to learn how to use the indicators. That's what I teach all day long. Everything I do is all predicated on using the indicators. Now, people say, Steve, your indicators lag, and that's true. And I said this to you before, price leads, indicators lag. But once the paint dries, I can tell exactly what I'm looking for once all the indicators are lined up. So with that, come back, be right back here. And tomorrow I'll tell you what's going to happen tomorrow here. A big day tomorrow. So I'll be right back. All right. So tomorrow, Thursday, we are looking at another big red number, as I call it. It's going to be the PPI number, the Producer Price Index. They normally are back-to-back. CPI first, then the PPI on another day. And, one of the things that people realize is that sometimes you'll get a hot number on the CPI, but a less of a hot number, meaning a lower number on the PPI. Don't ask me. I've seen it in my 41 years. It happens. But when this happens, if we get a better than expected CPI number, look out. We're going to rally to the upside here. And that's really important. So right now, I have sell modes here on the spiders on the 30 and the 60-minute time frame. Big numbers to watch out: 604.40, 604.52, and 606.16. 606.16. That means that $1.70, the S&P futures would now have to close above the 60, 90, 91 level in order to get a buy reversal on the spiders. So we're going to watch patiently for the for the PPI number. Now, gold also will be affected in this, right, as well. Gold, I still have buys on the 30 and 60-minute time frame. Earlier today, gold was trading 28.80. And look where gold traded today at one point, 29.35, I think. So gold ran 55 off the low. Go figure, right? With a hotter than expected CPI number. So tomorrow, also, we have OKLO earnings coming out. Also, the PPI number is definitely going to affect the markets in the commodities markets. Gold, we're going to see the index futures. And it's really another big day. And then on Friday, we have retail sales. So let's just take one day at a time. Tomorrow, PPI, big number. And we're seeing here names like PLTR rallying back up. Again, I'll be looking to short this PLTR again. It traded to 1866. Yesterday, dipped all the way down to like 12.5, dropped 6. This thing is just ripe. Even if it gets I don't care if it goes to the 120, 121. It's so overextended. I'm also, if gold pushes up, I'll be looking to buy dust. This is another good name. It's the inverse for looking for shorting gold. I'll be looking to buy that between the 41.5 and the 43.5 range on dust. Coinbase rallied nicely. Bitcoin rallied about 2,600 points off the lows today. But again, these numbers are going to be very, the PPI number more so than the retail sales number on Friday. So with that, really just tomorrow I think is just going to be another day. Wait for that 830 number, and then we're going to see the moves on gold, index futures, and commodity futures. All right. When I come back, I'm going to tell you the story of the day. All right. So, every single day, so many people blow up my phone. So many people talk to me in the Discord. It just gives me such great joy to relate to everybody. And for me, there's a story here. Actually, there's two stories here from the day. When you go into a big number like a CPI number, right? Now, if you're running a big book like some of my hedge fund guys, a couple $1 billion, they're long, they're short, they're positioned for it, and maybe they'll use index futures during the day to help them with their positions. I was with a friend of mine sitting next to him one day, and he ran over $1 billion, and the markets were screaming to the upside. His longs weren't really going up that much, but his shorts were getting killed, and he had to rely on using index futures to hedge against the stocks that weren't participating to the long side. So that's kind of something that's really difficult to do, to manage a long short book, especially going into these numbers, and there are 8 of them every month, right? At 8:30. And so today, it broke my heart at one point. Somebody had come in with a position from overnight, and whatever reason, whether it was a mistake or whatever, for me, day trading and being able to look at the markets the way I do really is something that there's so much opportunity during the day, but to come into a position, let's just say it was a mistake in this time, but to come into a day with a position into a big number like that to me, let's just say for argument's sake, they were betting that they were going to be right. Okay, that to me is gambling, but I can't tell people what to do with their money. I think there's because you don't want to be in a hole right out of the gate, and then you got to trade to come back. I'd rather just try to make as much money as you can during the day and not have to worry. It's gambling. It's either a good number or a bad number, right? And let's just say for this situation that it potentially was a mistake, okay? But for those of you out there, if those of you who trade into earnings or trade into, which I've never done, okay, or trade into or carry a position into a number, unless you're running a big pad, a long short. If I was at a big hedge fund, I had to put money to work long and short. Well, then that's the risk you got to take, and you got to really trade around it during the day. That's what you're required to do, right? But as a retail trader, to be able to go into a big number like that, that is something that I would not do, okay? And I think that that's gambling, okay, for whatever reason. The second story of the day is, it gives me such great joy, and we had some really great patterns here today, to see people blowing up the Discord, just saying the nicest things, saying, hey, we caught this, you called this, wow, what I made my goal. And it really gives me a lot of great joy and gives me so much enthusiasm when I see people really getting it and really just being able to really knock the ball out of the park. And when you take and you hit your goals each and every day and you're consistent every single day, I get goosebumps. I'm telling you right now. It just gives me so much pride to be here every single day, to be able to work with so many great people, to get the feedback, all right, and for me to hear their stories along the way. So today, it was a very, very good day all around, and I'm just proud of all the people, and thank you for all the kind words that they said throughout the day. So it was really, really very, very nice, all right? All right, everybody, I'll be here tomorrow. The Bull, the Bear, and the Ugly. I got over 41 years of trading experience. I can't wait to see you here tomorrow. Have a great night. Remember, PPI number at 8:30. Have a great night. God bless. God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bear, the Bull, and the Ugly podcast with Stephen Kalajian, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.